Hello, everyone. This is Kristen with the LTRC. Thank you for joining us for how to avoid the top 5 legal accounting pitfalls with our sponsor CosmoLex as part of the LTRC Industry Insight series held every Wednesday. Our speaker today is Erica Bursler. Erica Bursler is the Vice President of CosmoLex Practice Management Software. Erica's degree is in business administration, and she has nearly a decade of experience in the legal industry, catering to specialized technology needs of small to mid-sized law firms. Thank you all for joining us today. We will now begin the webinar.
Thank you so much and welcome everyone. So as mentioned, today we're going to be covering how to avoid the top 5 legal accounting pitfalls. So the layout of our session today is we'll talk a little bit about what legal accounting is. I always say when I do these accounting webinars, we can have a variety of people on the call, could be partners, could be staff, could be bookkeepers. So we'll start with a little bit of definition there and then get into what are the top 5 challenges that law firms face and kind of tips to avoid those. And a lot of it does come down to the type of technology that you use. So we'll talk about that as well. All right, so defining legal accounting. I like to put this in 3 types of sections, I guess you could say. The first one is the most generalized understanding of accounting, which is your business accounting. Every business needs to track money coming in, money going out. They need to keep an eye on their bank accounts as to what transactions are taking place, reconciling those, preparing for tax reporting at the end of the year. Now's the time of year where a lot of you have gone through that process. And this is non-legal specific. You know, every business needs to take care of the normal day-to-day financials of running a business. But with a law firm, you have a couple of things that are a little bit more unique. One being matter accounting. So there's the firm, the business, like what's going on from a global level, but you also need to be accountable for each and every file that you're managing. So it could be the costs that are being reimbursed and are they reimbursed? Could be their trust ledgers, you know, what's all the activity that's happening on those accounts, what's being done with that money, and even payment allocations. If somebody gives you partial payments, where is that money going? Is it fee? Is it cost? Is there a formula that your firm has that certain partners get a certain portion of that? That commission type structure, and I use air quotes when I say that, but is very common amongst law firms, especially in larger firms. And then the last piece is the compliance. So while there is kind of guidelines for like best practices, there's also rules around compliance. So a lot of that has to do with managing the trust account. If you are to get audited, we always say there are the generalized kind of that ABA level of rules, but there's also specific requirements for your jurisdiction. And that could be around just what a trust audit entails and what's expected and how often that happens, all the way to you might have specific requirements for your practice area with the type of activity that you do, that the management of funds has to be done a certain way. So that's where definitely the law firm's responsibility comes into play. You need to be educated on what's required and what's necessary and what is not allowed, and ensure that whatever staff is handling these activities, that they keep that in mind. So what I'd like to do, we're going to launch a poll right now. And this is related to what tools are you using to manage your accounting? So in general, the areas I talked about, your business accounting, your trust accounting, what are you using? So the options here are written ledgers, spreadsheets like Excel, maybe a generic accounting software similar to QuickBooks, maybe a legal specific accounting software that might be built into your practice management tool, or maybe you don't know. Somebody else in your firm is managing that from start to finish. All right, I think we can go ahead and pull that up. Okay, so as we could see, about 58% of you are using a generic accounting software like QuickBooks, followed by a legal specific accounting software, And then some are using written ledgers and spreadsheet, just a couple. And I'm very happy to say that none of you said you have no idea. So I am very happy with that fact, because whether or not you're doing the work yourself, there should always be that awareness there. So this will help me to kind of the few items that we're talking about, depending on your tools or process setup, can impact whether or not you're going to face these challenges. So we'll talk about that. So this next image that I'm going to pull up is related to law firm activities. So the left is more of your front office, client-facing activities. The right is your back office. And the reason I have this up is when we talk about accounting and more so just financials, it's that whole back office piece. Everything that is a dollar or linked to a dollar has to do with your billing and payments, your trust accounting, and your overall management of your business accounts. All of that is linked to money. The activities that lead to that money might be front office activities, but the management piece is all back office. Usually administrative staff, bookkeepers, et cetera, are the ones doing those activities, while you might have the partners, the paralegals, et cetera, maybe doing more of the front of the house, as they say, activities. So the challenges that I mentioned today are going to really weave together or impact billing, trust accounting, and business accounting, because all of those are financial activities for your firm. So let's now get into those top 5 legal accounting pitfalls. The first one that we're going to talk about is the mishandling of client funds. So this is probably one of the more obvious. Whenever you hear the word compliance, everybody's like, okay, that means there's things I'm supposed to do and not supposed to do. And when you're managing client funds, which are typically in the trust account, it does depend on what state you're in. Those are held into the trust account. There are those strict requirements. And like I said, this does vary state by state. So you want to make sure that you are, not just you, but whoever your staff is that's managing a trust account, could be one or more people, that they are aware of those requirements. And that is on the bank account level. What's going on in that trust account? Am I actually accounting for every transaction? But also on the matter itself. Every single matter has to have its own individualized ledger. And you have to have those checks and balances to make sure that proper things are being done. I think it's always it's perfectly okay, and actually in most cases recommended, to have somebody else handle the bookkeeping. I know, especially if you're a solo practitioner, very often you take on everything, because that's just, I say easier, but it's actually not easier, because it's taking you away from your day-to-day work, but you have a little bit more control and a little bit more visibility. That doesn't mean you can't have other people help you out. You just need to make sure that there is that checks and balances and visibility, no matter who is doing the work. So things or tips to keep in mind to do a little bit better. The obvious one is just know the requirements. Anybody who is handling your trust account should know the do's and don'ts in general, so that they're following the right steps and the right processes. Now, we'll talk a little bit about how technology can influence or impact the compliance, especially of your trust accounts, in a little bit. But the reason why I'm mentioning that is you can't expect any tool to be your compliance cop 100%. There always has to be that bit of human interaction to be like, okay, this is something I should be doing or shouldn't be doing. You may not have tools that prevent you from doing the right thing, depending on what you're using. So that education definitely has to be there. If possible, if available, there are plenty of trust accounting tools out there. There's some standalone, there's built into your practice management tool. Usually every practice management tool, legal specific, that I know has some sort of trust accounting built in, but that has safeguards. You can't commingle funds between matters. You can't overdraft on a particular ledger. You can't have, a check number unaccounted for or duplicate checks everywhere. Certain things are meant to kind of point you in the right direction, but there still is the responsibility solely on the firm, no matter what. You want to avoid duplicate records. So if you happen to have a setup, I know some of you mentioned QuickBooks or even spreadsheets or manual methods. kind of a follow-up to that is, where is your billing? Because trust accounting is a retainer function. You probably have money that's sitting there that eventually is going to be earned. So you have that record likely in with your billing as to what money is on hand, but also in your accounting as to what's in this trust account, who has what, doing my reporting, etc. So you want to try and either avoid or really keep a close eye on if you have duplication in separate records to make sure that they're always accurate. And no matter who is doing the bookkeeping, require regular reporting for review. There's a good amount of compliance reports like reconciliation reporting, trust ledger reporting, that you can say to your bookkeeper, I want these 5 reports every month, let's say. They will at least let you know that transactions are being entered in a timely manner. Are they reconciling in a timely manner? Because that is one of the challenges too, is if you don't reconcile for 6 months, that can be a big issue, because you could have an error that happened 4 months ago, and it's a lot harder to fix today than it would have been 4 months ago. And then you're having to really dig through that and figure out what happened. So timely reconciliation at the minimum is really important. So asking or requesting these reports are due to me every month means that there's at least a kind of that check being like, okay, we're up to date. We're keeping up every single month on these activities. The second pitfall is related to costs. So the reason why I like to bring up costs is there's a lot of disbursements, a lot of out-of-pocket expenses that the firm pays on behalf of your client. It could be filing fees, could be related to the case, like maybe an expert witness, anything that the client's not paying directly. They still need to get paid very often upfront. So in those situations, the expenses get paid out of your business account, but do they get billed to the client? And also, do they get reimbursed? So there's the 2 steps there. They could be billed and not reimbursed, or if they're never billed in the first place, they're definitely not going to be reimbursed. So this can create a collections issue. This is an overall workflow issue, because if your system and processes are not set up to properly flow that money into those invoices to ensure that they get billed, they can easily get dropped. And the challenge there is, I can guarantee probably everybody on this call knows that they have costs that are dropping. They just don't know how much. Is it a couple $100s? Is it several thousands of dollars? You might not even know the answer to that question. And that's a direct hit to the firm's bottom line, simply due to simply due to a non-streamlined workflow. You know, there's gaps in there somewhere, and that's causing those items to be missed. So some tips to keep in mind. My first tip is actually to track a credit card ledger. If you have business credit cards at all in your firm, let's say each partner has a card, or maybe there's just one general office card, track that as a ledger in your accounting software, whatever that may be. Because there's so much activity that happens on those cards, you don't want to just track, is it paid? You know, let's say I had a $2,000 balance on my credit card, I paid it off, great. But what was that $2,000 made up of? How much was a firm expense? How much were matter expenses? How many of those were actually billed? Were they reimbursed? So if you track that ledger that actually has, let's say that statement had 100 transactions on it, who were those transactions for and what were they? It'll allow you to get a lot more granular in your tracking and ensure that nothing is missed. You can seek mobile access to enter your expenses in the moment. So if you have a billing tool, or the billing software that you use has a mobile app, that's excellent. It's not just great for tracking time, also your expenses in the moment. If you're in court and you're paying a filing fee right there, plug it in your phone, call it a day. If you need to remember it for later, the likelihood of that happening is very slim. And could it get caught in the future? Possibly, but if you don't save that receipt, if you don't look through your records, you might forget to ever enter it. And that, of course, will never get reimbursed. You want to streamline your accounting and billing workflow. So this is from kind of the perspective of, you could track the expense from a billing perspective, like an actual on the invoice, put this expense, but also in your accounting record, wherever that is, you have a check or a credit card expense, or maybe it's even paid by cash, however you paid that particular payable. Are they linked together? in some way, shape, or form to know that everything is accounted for. And the more simplified that is to bill that through, like I said, the less items will be missed. So you could either do that by having a really solid integration that goes not from billing to accounting, but from your accounting to your billing, a tool that has everything all in one place, or by having a really solid checks and balances. And you want to make sure you cover your costs first. So when we're talking about receiving payments on invoices, it really needs to cover all of your costs first. Let's say a partial payment, cost should be covered first, fee should be earned absolutely last, because fee is, if you're going to write off anything, hopefully you don't have to write off anything, but you're not going to be writing off expenses. That's something that needs to be reimbursed in full. And that actually leads us pretty nicely into income posting. So this is when you're sending your bills to your clients and they're hopefully paying you at some point. You can have several components on those invoices. You can have direct costs, which we also call hard costs, something that's related directly to that case. You can have indirect costs, which maybe is like photocopies or printing or some sort of overhead that you're passing through. You can have some taxes depending on where you're located. You can also have some additional liabilities in there. And then lastly is fee. And fee could be hourly fee, could be fixed fee, kind of just depends how that file is set up. So there's a lot of different components. You may have this bill for $1,000, but it's not just, hey, I earned $1,000. It's what is that made up of? So just like your bill is itemized, that payment that comes back in has to be itemized as well. All of those items have to be paid accordingly. When there's those partial payments, which I mentioned a little bit earlier, it's like, okay, well, I have $1,000 invoice, I got paid $500. What gets paid out of that? And how does my billing tool or accounting tool know what to pay first or what to allocate that payment to first? Depends on the tool that you're using. So I know that QuickBooks kind of does by default a proportional allocation. So if I had that $500 payment going towards that $1,000 bill, it kind of sprinkles it across all of the components. So there's a little bit to everybody. What happens, the risk there is eventually if you do need to write off part of that bill, you will be writing off cost as well as fee. And you might not cover all of your costs in full. Some tools like legal specific, especially a practice management type of tool, if they have the accounting, they might allow flexibility there. Default, always ask what the default behavior is, but I know with CosmoLex, for instance, it is costs first, fees last by default. It's always going to perform that way. Some tools have flexibility where you can change that if you need to, but just be educated on, okay, when I apply this payment, are those decisions being made by my data entry person or by the software that I'm using? And you want to make sure that your billing and accounting records match. So invoice payments is one of those areas where it impacts both sides of that coin. You know, you have your invoice that gets updated, the AR will get reduced, which is all great, but you also get a deposit into a bank account. If you're paying from trust, you get a debit from another bank account. And all of that needs to be reconciled on the accounting side. So you just want to make sure that those payments that come in are properly reflected on both sides and that they match. If they don't match, then you might have a risk of having inaccurate information available to you. Like you might have inaccurate AR in your billing tool, or you might have an inaccurate bank balance in your accounting tool. Some tips here, have awareness of the invoice components. So like I said, that $1,000 bill, know what's on it. And this is just at the very beginning, if your software kind of takes care of it for you and you know, you kind of learn how that works. You won't have to be aware of every single thing. But when that payment comes in, at least now, if you don't know the answer to this question, either you look into it or talk with your accounting staff to say, when we get these partial payments, what happens when we have kind of a mix of things on the invoice and it's not just fee? Verify how your software does it, or if your bookkeeper, whoever is setting that for you, how is that set to work? You also want to reconcile those billing and accounting records regularly. And ideally, you should have kind of a second set of eyes doing that comparison. There's a few different points. I would say the matter costs that we mentioned before, invoices, and retainers especially are three crossover points between billing and accounting that you want to make sure there's always a checks and balances, because if you make double entry is one thing, but if you make a change in one record, you want to make sure that change is reflected elsewhere as well. Insufficient business analysis. So this is not a requirement. This is just something to help you grow your business. And I shouldn't say just, it's important. It's very important, but I think sometimes it's not prioritized to really look at your business, how it's functioning, and how you can do better, or how you can arm yourself with the proper data to make better decisions. So you always want to have that pulse on how not just your business, but also individuals are performing. A law firm is a business at the end of the day. I was just talking to somebody earlier. I think that law school in general doesn't do the best job of preparing lawyers to be business owners. Whether you're a solo practitioner or you're part of a larger firm, if you're part of any decision-making or in that capacity at all, you have to take these points into account. So this is not unique to law firms. This is any business needs to know, how are we performing? What's going well? What's not going well? What's our benchmark? How do we know if we're doing well or not well? Where do we want to be? Where are we at right now? And what items need to have a little bit more attention brought to them? What could be done a little bit differently? And it can be a lot of information to make sense of. You probably definitely have, unless you're only using written ledgers. If you have any type of software, even spreadsheets, you have a lot of data at your fingertips. You know what money was paid by who, what was reimbursed, who gets what portion. It's all there. It's just really difficult to make any sense of it. And I think if it gets incredibly overwhelming, it's less likely to be prioritized. So some tips to kind of help with that. And in case you're not already doing this, if you are, great. If you already have your business questions and goals for the year and you're focusing on them, that's excellent. If you're like, I have no idea what you're talking about, maybe this will help. So the first thing is evaluate your business plans and figure out what is most important to you or in general to the firm. What is it that you want to do this year? Is it growing your client base? Is it maybe earning more fee from the same number of clients? Is it getting more referrals? Is it, and it could be multiple of these things. Is it, how do I do more marketing that particular year? That's the one thing you need to figure out, is what is most important to you as a business. Then you want to develop a list of unanswered business questions. I mentioned about how my referrals, if I want to increase my referrals, that sounds like a goal of mine. Well, how many referrals am I getting today? Am I lacking that data in order to make those, either answer those questions or make those particular decisions? Seek tools that can consolidate and analyze that data for you. So like I said, you have this information in a lot of different places. How do you put it in a place that makes sense for you so that you can make those decisions? Then you want to regularly measure against those benchmarks and the goal progress. So like I mentioned, where are you at, where you want to be, and how do you get there? So if you have the tools and you hopefully have the data in those tools and a mechanism for analyzing that data, it could be in dashboards, could be in reporting, all of that can help you to then look back on it, see the data in a way that makes sense to you, and make those decisions. And here's just a sampling of business metrics. So business metrics are areas in which you may want to know, how am I doing in this area? You know, I have questions relating to this particular item. So some examples here are WIPs, which is your work in progress, or AR by aging. What if you have, do you know the average aging of your unbilled balances, those WIPs? You may have ones that are 2 or an average of 2-3 years. Now, sometimes that makes sense depending on the type of case that you have. But if you have the ability to bill for those in segments or sooner rather than later, do it, you know? But also if you have somebody that has this large AR balance or money owed to the firm, Why are you continually billing? Let's try and get down that balance that they owe before we continually work for them. And again, you need to figure what's too large and what's, average or a good number for the type of work that you do. Revenue by revenue or profit, so money coming in versus money coming in minus costs by case, practice area, partners. Utilization and realization is a big one, which means how do I know the work that everybody's doing, the time that they're tracking, how much of that is actually turned into billable work? I may have a 40-hour work week, but maybe only 20 hours of that is billable. Well, why? What's being done with the rest of that time? Are we no charging it? Are we doing a lot of non-billable work? Does it make sense for the role of that particular person? And realization is once it's billed, how much of that is actually recovered, how much is actually paid. And there are firms that have their timekeepers or their responsible attorneys responsible for the AR on their particular files because they want that motivation there to actually collect. Moving down a little bit, client cost analysis, that's kind of what I talked about. What costs were incurred, how much of those were billed, how much of those were collected. So it's like a cost funnel. And just overall trends, because I mentioned things like your repeat and referred business. The type of work that you do might not be an area where there's a lot of repeat clients, and that's okay. But if the potential is there, is it happening? If not, how do we increase it? Especially referred business, anybody can refer, especially in a service business. Is that happening? What's that amount? Because referred business, honestly, is one of the best because it is a no cost option. You're not even having to market to that audience. They are just referred directly to you. So some ideas in case you don't have metrics currently in place for your firm. Then we get into legal specific expertise. I think that, a lawyer has to be licensed in order to practice law. So of course they need to have a certain level of expertise, but I think we often don't seek or prioritize the same type of expertise, not the same one, but a level of expertise when it comes to financials. Legal bookkeeping is not a hat that any employee can wear. It's very, very common to have a relative do the bookkeeping, an office manager, a paralegal. Could they do it? Sure. Are they trained and knowledgeable on requirements? Maybe not. Have they been through an audit before? Maybe not. Are they studied or knowledgeable of what is required? Maybe not. So you want to make sure that whoever's doing this work has that knowledge, and also don't assume that bookkeepers have this knowledge. If they've never worked with a law firm before, they may not have an understanding of any of the legal specific components that I mentioned. So don't assume that a bookkeeper would know how to do a trust audit unless they've worked with a law firm before and have actually gone through a trust audit. You can't rely too heavily on generic accounting tools. They are generic for a reason. They're purposely industry agnostic. They are not pointing you in the right direction to do certain things. If you have an experienced bookkeeper that has done legal accounting before and knows the workarounds and the customizations and kind of figures it out, that's one thing. But especially if you have inexperienced staff, a generic tool is not going to prevent them from doing overdrafts, commingling of funds, anything like that. And I mentioned this a little bit earlier, but just to stress it again, no matter what tool or people or resources you use, accountability falls on a firm. So even if you outsource to another bookkeeper, to a bookkeeping company, the accountability is not on them. It is solely on the firm. So you want to make sure that you utilize the right resources, whether they're in-house or not. Some tips on that is hire experts in the field. The great thing is, I think today with a lot of cloud technology, which we'll talk about as well, the world is your oyster, as they say. You can hire somebody from absolutely anywhere. They don't have to be local to you. They don't have to be able to come into your office necessarily. You have a huge, huge pool of people to choose from, and there is a large niche market of legal bookkeepers. Seek resources with experience in law firm compliance audits. I personally think if they've gone through an audit in your jurisdiction before, that's excellent because they kind of know what to expect. They know what they did right or wrong in that previous situation, and they will, you have to kind of act like you'll be audited tomorrow. You know, like, am I in a place that if I got audited tomorrow, I would be good? That's the mindset that needs to be there. And like I said, just know the limits of whatever software you're using. Whatever solution you choose, that is completely up to you to decide what's a fit for your firm, but know what the limits are so you can account for those limits with like the checks and balances and all those other kind of reconciliation steps. And I mentioned about how tools can impact your compliance. So these are actually the 4 options we had in our poll today: written ledgers, spreadsheets, generic tools, and legal specific. On the left are various accounting requirements or things that you really should have in place, like, can you reconcile in this tool? Can you close your books, so go back and just start changing everything? Are there safeguards like not allowing overdrafts? Can I get the compliance reporting I need for my trust audits? And this is kind of how they match up to those. So you can see as you go down the line, the left side is the most flexible. The right side is the least flexible, because flexibility is the evil of compliance. It's the enemy. The more flexible a tool is, the more likely mistakes can be made when it comes to financials specifically. And my last point I want to mention is just prioritizing remote collaboration. I think right now, I don't even need to talk about this anymore. I think everyone kind of knows to be able to work from wherever you are, even kind of semi-post pandemic, everybody works from home, from travel, from another location. It shouldn't matter where you are. The traditional mindset of the bookkeeper has to come in every 2 weeks and work on this specific machine, it no longer is needed. So we need to kind of move out of that headspace and really leverage the benefits of having that flexibility of cloud access. And I know some firms that put their trust accounting on a computer in the corner with no internet, because that's the safest way to be. Somebody could still break in and steal that computer. Nothing is 100% safe, nothing. But there are ways, if you have this data accessible globally or cloud-based, to segregate it from a permissions perspective. And that's really how you want to do that. So overall, if you're looking at a tool or looking at your existing financial technology, you want to look for matter-centric record keeping, because that's really important for legal accounting. You want to have any legal specific functionality your firm requires, especially if you're doing any type of contingency work, a lot of retainer management. There might be specific trust accounting functions you may need. Safeguards, like I mentioned, compliance reporting built in, a tight communication between your billing and accounting records, and that streamlined yet secure remote access. So you're not ever held up by where somebody's located in order to get your financials all in line. And before we hop into questions, I just want to kind of introduce you guys a little bit to CosmoLex. We offer a cloud-based all-in-one legal practice management solution that includes your day-to-day tasks, your billing, as well as your business and trust accounting. So if you're looking for an all-in-one solution in the cloud, you can, of course, reach out to us or go to cosmolex.com.
All right, some questions for you. The first one I have is QuickBooks Online a good option for law firms, and does CosmoLex integrate with it?
So QuickBooks Online is becoming more and more popular, not just because it's cloud-based, but also because a lot of the cloud-based practice management tools only integrate with QBO, as we call it. It will have similar challenges as QuickBooks Desktop in terms of it is agnostic. It's not legal specific at all, but I do suggest if you're using QuickBooks Desktop, don't assume that QuickBooks Online will work the same. It has different functionality, so you want to kind of look at it as a new tool and see it for the needs that you have and see if that makes sense. CosmoLex specifically does not integrate with QuickBooks because it's not necessary. We have the full accounting built in.
All right, next question for you is how should I be involved if my bookkeeper is the one who handles most of my accounting?
I think the best thing is to set expectations. Ensure that your bookkeeper has the proper training and knowledge to properly handle your accounting, and that could be a requirement or expectation you set on that person, but also those monthly check-ins of, hey, I want this report stack every single month, or even just reviewing of the bank statements. I know we hate to talk about, bookkeepers that steal money. I hate to talk about it because I don't want anybody to have distrust in their bookkeepers, but it does happen. You want to at least have that awareness of checking your bank statements and knowing what's happening. Don't have it in a black box.
All right, great. Thank you for answering those. Erica, do you have any last thoughts before we close out?
No, that's it. Thank you so much for having me.
Actually, it looks like we got another question, and that is, how does CosmoLex differ from tabs 3 billing and trust?
Sure. So tabs 3 is a very, very robust billing and accounting software and practice management as well. The main difference is we are a cloud product. I suggest if you're interested in learning a little bit more about CosmoLex functionality, definitely set up a demo because we are 2 separate products. But set up a demo and we can definitely walk you through what CosmoLex has to offer, and you can compare that against whatever you're utilizing currently in tabs 3.
All right, looks like that's all the time we have for today. I'd like to thank our sponsor CosmoLex and all of you for attending our webinar today as part of the Industry Insight series. I would also like to thank Erica for presenting today. If you are curious about future webinars, please check out the ABA LTRC page or follow our Twitter at LTRC for updates. You can keep up with CosmoLex at cosmolex.com. We will now conclude the webinar. Bye, everyone.
Bye, guys.